depreciation. How I calculate depreciation? Oh, how many methods? Yeah. So one method is straight line method. Straight line method is very easy and simple. The one that example we used, the cost of my car, 22,000. Scrap value was 2,000. Useful economic lifetime is 5 years. Then if I ask to calculate depreciation per year, what we do? 22 minus 2 divide by 5. This will give me the answer. And the depreciation for year 1 and the depreciation for year 3, how much? That particular year, don't confuse yourself. I'm not asking the accumulated number. I'm asking what will be the full depreciation if I do the calculation on the year 1, how much? And I do the same in year 3, how much? 4,000 in the year 1. Okay. And what about year 3? Are you sure? Everyone? Habibi, you bring a knife. I need to deal with him. So, remember, when the term straight line method means every year depreciation is equal. And look into this diagram. This is the cost. This is the lifetime. And this is 22,000. And this is 2,000. 1, 2, 3, 4, and 5 years. With the 5 years, my asset story finished. So what happens is, this will not come down. It will stop at that point. And if I to find out the depreciation per year, so this difference is the depreciation. So that is how straight line method, the line is straight but downward sloping. Line is straight but downward sloping. This is straight line method. Calculation is very simple like this. Okay, let me move on to the other one. How many of you started reading that book, Frank Wood's Business Accounting? Give me a very honest answer.
We are going in very tension. Yes.
How many hours you have in a day?
24 hours is good.
How many hours? 24. How many hours you sleep? Yesterday I was attending a meeting. In that discussion came about how many hours you sleep. How many? Hope anyway. Let's continue with reducing balance method. Enough preaching. Then otherwise it will become boring. Where is the duster though? Right. Fine. So the point what I wanted to raise was, please read that book. Why I had to use imbalance method then? We depreciate, but we make, see, both straight line method and reduce imbalance method, both are assumptions. Okay, it's a management assumption. So management presume in the early years, the economic usage of that asset is much bigger. Later years, that goes lesser and lesser and lesser. Very good example is usage of the broomstick at home. When you buy a broomstick, in the first 1 or 2 days, that you are very busy in that. But after a week or 2 week or 1 month time, it is then passed into washroom, and the next month it is thrown away to the dustbin. So the reduced imbalance method is a depreciation method to calculate depreciation. In the early years, the depreciation value will be bigger. Later years, the depreciation value will be lesser. How we do actually? Now in this example, my car cost is 22,000. And we said that lifetime 5 years. And we also said that scrap value 2,000. Now with this information, I will not be able to calculate depreciation using reduced imbalance method. I need depreciation rate. Now, forget about reduced imbalance method. Using the straight line method, with this information, can someone tell me what is the depreciation rate per year?
Simple math.
Yeah, now for car, this example, if we are using straight line method, what will be the depreciation rate percentage? 20%. How you calculate? Now total asset that I will depreciate, see, depreciable amount of the total asset, if I assume 100%, and the lifetime is 5 years, so each year I will depreciate how much? 20%. Very simple. But here this method scenario different. You cannot calculate like this. Anyway, let's assume they gave you 40%. And another unique difference between straight line method and reduced imbalance method, we will ignore the usage of scrap value. We will start calculating this, but they will be very careful at the end. After finishing the 5th year, they will end up having 2,000 as the remaining value, which you will sell it. So how I calculate? Year 1. My depreciation will be 22,000 into, how much is that?
It's
8,800.
Don't go for 40, go for 10%, multiply by 4.
And every one of us have calculators here. So if your brain is dead, use the calculator. So first year, my depreciation is 8,800. Second year, year 2, 22,000, and we subtract 8,800, and then we multiply this by 40%. So, but see, this is cost, right? And what is this? Depreciation, and this is rate of depreciation, isn't it? This is the second year. So how much is that? $22,000.
15,200 into 40%.
Yes. 5,280. That's year 2. Now, how to calculate year 3 then?
15,000.
Yeah, exactly. What is the answer here? 15,200, right? So 15,200 minus 5,280 into
40%.
another way of doing this, or 22,000 minus total of 8,800 plus 5,280 into 40%.
Okay, answer? Yeah?
The 22,000 is
22,000 minus 8,800 is not 15,200? Or how much you get?
13,000.
13,000. Okay, then that's a laborious mistake. 13,200, and then here it should be 13,200. See, cost minus depreciation. In any year, cost minus depreciation, if it's a first year, cost minus depreciation becomes my net book value for the year 1. We call it net book value, means the cost minus depreciation. But we also have another term, cost minus accumulated depreciation for any years. This is only for first year. But for any year, this is equation. Same answer, net book value. What is accumulated depreciation? Actually, this. The total of depreciation so far for the previous number of years. So, if you accumulate this, now this will not be really, anyway, you are not doing any exams. But in exam, if they ask you to calculate what is the percentage of depreciation under the reducing balance method, that will be this is the equation. This is the number of years, scrap value, the cost, and that will give you the rate of percentage into 100. Right. Come back to, so I hope you understood this. Now, if you draw a diagram now, this is the cost, this is the time. Now, straight line method, my diagram went like this. But in reducing balance method, my diagram will go like this. Curve, downward sloping, a curve diagram, it's not a straight line. So if you really calculate the depreciation for this, the early years, it will be big. Later years, it will be small. Understood? So this is the second method. Second method is reducing balance method. Doesn't mean there are only 2 methods. There are actually 7-8 methods, which is not famous and which is not normally discussed. Production unit method, number of hours method, a double, what do you call that, what do you call this, number of